My scanner surfaced roughly 15 setups last week. I took one. That one trade returned 5.8% in 10 trading days. And the part most traders would have gotten wrong had nothing to do with the entry. Before I walk you through the trade, here's how the Alpha Sentinel platform works. 3 tools, 1 engine. So on the Alpha Sentinel platform, we have 3 tools that you can use. The first one is called the Alpha Scanner. What that does essentially is it finds tradable opportunities or stocks that we think might be going up or that might be going down. And we look at a universe of about 10,000 US equities. We have narrowed it down to about 1,000 stocks that we like to monitor. And that's simply because of the market capitalization or the volume of the stocks that we think makes sense to surface to you as a client. So basically, we're looking at these stocks and then we have a proprietary 5-gate algorithm that checks each stock for things like volume, things like where the RSI is, things like where the TTM Squeeze is. So we've got a bunch of things that we look at. Once a stock clears all 5 gates, at that point it's surfaced for your review. And essentially what that means is, if we are throwing out 20 opportunities a day, it does not mean that you have to take 20 opportunities a day. It just means that from a universe of maybe 1,000 stocks, you are now looking at 20 of the ones that we think have potential for that day, for that week. And then you're, using your own judgment, using your own criteria to narrow in and zero down and actually pick anything that you want to trade or not. So that is the first tool that we have on our platform. The second tool is what is called the Alpha Sentinel, the Shield. We have the 24/7 risk monitoring on every name that is on your watch list. So as you sign into our platform, you will come up where, you will have a watch list. You can put your 5 or 7 of your most watched stocks on that watch list, and it will monitor and scan them 24/7. So what that means is that supposing you own Apple and then you have a reasonably large position in Apple, you put that on your watch list. So the platform is going to scan Apple 24/7 for you. So if something seems off, if there is some bad news about Apple, which is sending the stock price lower, or if there is some important news that we think you need to know about Apple, then the system will send you an alert. It will basically say, at a certain time, take a look at Apple, and then you can sort of decide what to do with that information. You can choose to ignore it completely. You can say, hey, you know what? Maybe Apple is falling. Maybe I should take my profits, sell the position. Or you can even say, hey, Apple is falling. Maybe I need to buy more. So the decision of what to do is totally in your hands. We're just bringing you awareness that something is happening to the stocks that are on your watch list. The third tool that we have is called Stock 360, and that basically gives you 360 view on any stocks that you currently own or have in your portfolio or are wanting to buy and you want to research them. So think of it like a research tool where you add in the ticker, the symbol of the stock, and it will tell you the technicals. It will tell you, what Wall Street's price targets are. It will give you a bear case. It will give you a bull case. And it also runs the ticker through our proprietary 5-gate protocol. It'll give you an analysis of where we think this stock is. Are all 5 gates open? Is this a good opportunity? So we will present the information to you in a manner where you can use it in a meaningful way. So that is the purpose of these 3 tools that we have on our platform. So I'm going to explain the 5-gate protocol that we use on our platform. which is proprietary information in terms of how we've structured them, how we've weighted each of the gates, so to speak. And anything that we surface on our site has to pass all 5 gates. So every name in the scanner has to pass all 5 gates independently. So if you miss one, it does not surface it. You do not see it. So the selectivity is the edge before you've made a single decision. And I'll explain what the 5 gates are. So for any stock that you're looking at, the first gate is what we call the EMA alignment, which means that the 8, 21, and 50 exponential moving averages should be stacked in the correct order. So directionally, they're all sort of trending up or trending down, whatever the case may be. The second gate is the TTM squeeze, where we are talking about the momentum of the stock. Is it coiling inside the Bollinger Bands? Is there compression? Typically, compression precedes an expansion. So what that means is if the TTM is coiled, then, it should fire in one direction or the other. So we're not saying it's going to fire up. We're not going to say it's going to fire down, but it is coiling, and that is the second gate. The third gate that we look at is what is called the RSI confirmation. RSI basically is the confirmation of momentum, and we have certain levels that we like where the RSI is confirmed, it's either going up or it's going down. So we will surface that information for you if that gate is also met. The fourth gate that we look at is what we call the volume validation. Anything that tends to go up or tends to go down typically will have increasing volume. So we look at what the average volume is on a given day, and then we see where is the volume for this particular stock today, right now. So if it meets our volume criteria, then it'll be another gate that has passed. And then, we're looking for the multi-timeframe confluence, which means that the 1 hour signal, the 4 hour, and the daily should be aligned, which means that, if it's showing us that it's going up on the 1 hour chart, it needs to go up on the 4 hour chart, it needs to go up on the daily chart. So if all 5 gates are aligned, at that point, we are surfacing anything on our platform, right? So if you're looking at this and saying, is this a good opportunity? Yes, we've narrowed it down from 10,000 stocks down to 1,000 that we will actively monitor on a daily basis. And then out of those 1,000, the ones that actually pass the 5 gate protocol are the ones that are surfaced for your review. So that's where we are. Tuesday, April 14th, 10:06 in the morning, the scanner ran the overnight batch, and here's what came back. 15-ish names, cleared all 5 gates. Apple was one of them, as you can see on the image bottom right corner. It was trading at 259.83 at the time of the scan. And this is what the algorithm returned for every subscriber that morning. Same output for everyone. What you do with it is your decision. 3 minutes later, I reviewed the setup, I liked the structure, and I bought Apple at $260.40. The decision from scan to fill, about 3 minutes. So after I bought the stock, I left it for a couple of days because it was trending upwards. And then what you're seeing here is a snapshot on day 6 after I purchased Apple. Apple was trading at about $272 at that time. So the position had run. That's when I decided to sell my first covered call, collecting $6 per share in premium. I don't sell it on day one. I let it extend first. I let it run first. And that choice is worth about $3 per share on this trade alone. And that's the key lesson. So don't rush to sell anything is what I do. Now you can do whatever you want, but I'm just showing you how I trade my own sort of platform and what it surfaces. So 3 legs. I sold a covered call, number 1. And I sold my call, bought it back. So I cleared $2.70 per share. I then sold covered call number 2. I sold the call and I bought it back and I made $1.50 on each share. And then eventually I decided to sell the stock. I made $11.05 on each share. So the total that I was able to collect was about $15.25 per share. That translates into a 5.8% cash on cash return in about 10 trading days. If you annualize that, it is off the charts. Hypothetical, your fills and sizing will differ, but here's what that return looks like at different position sizes. So hypothetical gain shown on $1,000 invested, it would become $1,058, which is a gain of $58 if you invested $1,000. If you invested $10,000, the return on capital would be $580. So you would have $10,580. If you invested $100,000, then that 5.8% gain applied would be about $5,800. So you would get back $105,800. So the rule from this trade is simple. Don't sell the covered call on day one. Covered calls are profit-taking tools, not an entry tool. On this Apple trade, waiting 6 days added $3 per share. If I sold on the entry morning, I'd have capped my move before it ran, and 30% of the total P&L disappears if you sell right away. Sell after the move, not at the start. Again, understand that this is what I do. You can sell the next day, you can sell 7 days later, you can hold forever. So it is totally up your choice. The purpose of this video is to show you how I trade my own money using my own platform to make profitable trades. And as we move forward, I'm going to be sharing 1 or 2 trades a week, just showing you guys what shows up on the scanner, how I trade it, and we will have a running track record of wins and losses and things like that on the platform. So please understand that you are not copying what I'm doing. I'm just sharing with you how I do this. So that's the whole system. Alpha Sentinel scan surfaces tradable opportunity. I review, I decide, I manage the trade. The platform gives me the intelligence and the decision is always mine. It'll be yours too. This is volume number 1 of the Sentinel Desk, and I'll be documenting every trade, wins, losses, and the ones I passed on. Follow along at Alpha Sentinel AI. Your sword, your shield, your decision. Thank you.